I'm at the bank making money, making moves. Machines with tools and drills, making grooves. Missions impossible.
Welcome back to In the Green with Invstr. This is Nora Lee, your host. I hope you're having a great week. I'm in the green this week, and today we're with Thomas Quinlan, one of our super users. If you're not following, I suggest you do follow him. He always comes out with the latest earnings that are coming out, what to watch, and great articles that you should be following. Thomas, how are you doing today?
I'm doing well, Nora. How are you?
I'm doing great, thank you. So tell me, what's keeping you busy these days in the markets?
For the most part, actually, I've been really focused on so we have this new $100,000 thing that you guys are going to be doing.
Yes.
The Invstr Challenge.
Yes.
So I put together a portfolio that kind of mocks what I would do if I were to win.
Oh, really?
So that's really what I've been focused on this month. And
so can I ask you, I'm very curious to know, what is different about what you would do if you won the $100,000 to manage than what you already do?
Well, I don't know. So there's a lot that I don't necessarily know about the Invstr Challenge.
Okay.
So for me, I'm just going off of kind of sort of, if I were to win and I got 100 grand, I think that I'm going to invest in these specific stocks. And it's the ones, I think I posted it earlier this week or over the weekend.
Performance on Apple, Facebook, Amazon.
That was my all time. Right. And I've been holding those stocks, and they have, I've rolled them over month after month, and everyone can see that, if you buy a stock and you hold on to it, and even though we went into March and the stock, kind of plummeted and it rebounded, I still did really well with all of those, buying them back in October of 2019.
Yeah, it's
so I was like, you know what? Yeah, I think I'm just going to hold on to those and see what happens. And I'm interested to see what happens with an individual that wins the 100,000.
Well, so am I. I'm interested as well. And it will be interesting to see who our proprietary model chooses from the 10,000 people that are competing for the month of November to manage that $100,000.
Yeah, it's going to be so cool. I mean, I really, one question I do have about it, Nora Lee, is the 100 grand going to go on an account that's on Invstr and we trade it just like we do every day on the app, or will it be in under a different platform?
So it's $100,000 of money that belongs to Invstr in an Invstr managed account, and it's going to be slightly different to how you're used to doing fantasy finance. There will be some rules in place. I know there's some people that have great strategies where they're basically doing almost a high frequency strategy. That won't work for the $100,000 challenge. And in fact, the way we're going to look at selecting the winner, the model, as has been mentioned, is going to be based off of portfolio metrics, things that you would look at if you were giving, for example, a hedge fund manager your money to manage. Yeah. You're going to want to see what's their drawdown. And for people who don't know what a drawdown is, that's the gap from, your highest point to your lowest point. So say, for example, you were up 30% and then down 10% in the month and then end up back up 20%. Well, you would have had a drawdown of 40%, which is significant to have that sort of movement in a portfolio. So things like that will not bear well for somebody wanting to win. So something that's more stable, smoother, where your volatility of your performance is lower than the actual return. And that's what's known in the investment community as a Sharpe ratio. I don't know, is that something that you're familiar with? Sharpe?
No, actually, I'm not familiar with that.
No, so when I was in the markets, it's how people measure how good you are. So if you make, 60%, but you took 200% worth of risk to make 60%, Well, that's not a very good return. So essentially, it's saying for every dollar that I make, how many dollars of risk did I take? So if I make $1 and I only took 50 cents of risk, that's essentially a Sharpe ratio of 2. That's a very good Sharpe ratio. Anything higher than 1, and generally 1.5, is a very good risk adjusted return.
Interesting.
Yeah, so volatility is something that's very interesting to look at. Obviously, we are in volatile times, but as a result of that, you have outsized returns. But it's a concept that I think most people are not familiar with. And one of the great things about this $100,000 investor challenge, from my perspective, is that it's an opportunity to educate our users about these different ways of looking at your performance. It's not just
Yeah.
your total
Well,
return.
I think we'll find that the winner will end up actually really taking it serious, rather than maybe those who might win. They could be in the extreme league, who have done over 500 trades in a month or 600 trades in a month, where they're buying and selling constantly, making 1% and getting out and finding something else. They're going to find themselves actually taking this money and holding on to a stock and hoping for a little bit of a larger return. I
Right.
know on some of the platforms that I use, in order for me to really make money, I have to make a minimum of 5 to 8% in order for it really for me to make money.
Right.
Because you have a certain amount that it costs for you to buy a stock, and then when you go to sell that stock, there's a certain cost involved.
Right.
So I have to take that into consideration when I'm buying in and selling.
Right. Well, this will all be commission free, but what we will do for the person that gets to manage the $100,000 for the month of November, we will set up stop losses, because clearly we want the person to make money.
Right.
So that way they can have, some more capital to help fund their long-term investments. But we also don't want to lose money, since we're going to take the losses. So we need to limit those losses. I think another thing that will be interesting, and we want to profile the person who wins and the investments that they're making, is also the psychological side or the physiological side. I know for myself, when I started in the markets and investing significant amounts of money, your heart rate changes. When there's a lot of zeros at the end of the amount of money that's at stake, and your behavior can change as a result. So that will also be interesting to see if the person behaves any differently because of the quantum of money that they're going to be
without
managing.
a doubt.
Assuming they don't already manage a big portfolio for themselves.
Well, for finance, the fantasy finance, I take more risk in the game than I do with my own money. I take that risk on the game just to see how that theory would have worked out.
Right.
But when it comes to, it's more practice, so that I can say, okay, I'm more comfortable with doing that on my real portfolio.
Right. No, those are all very good points. And another thing we're going to look at is diversification, because we don't want somebody who just goes in and wants to take a bet on just, one sector or one or two stocks and just be trading around those stocks. That's not really what we're looking for. We're looking for those portfolio metrics where there's diversification, there's a smoothing out of the returns, there's not ridiculous amounts of volatility, and the holding period is not too short either.
Yeah, I think I did a project for a while. I think I started at the beginning of the year, and I went for 3 months where, I was very diversified. I think I owned like 68 stocks.
Oh, wow.
And then what I tried to do was, I tried to be diversified, but then I tried to be diversified within each sector.
Right.
So, within the auto sector, I'll say health, because that's the one I know the most. So within health, I would own a health stock like Johnson & Johnson, but then I was also interested in holding a stock that was related to the distribution of medication.
Right.
I was interested in a tech stock that had to do with billing and patient matters within hospital software system. So it was being diversified not only as your whole portfolio, but then within each sector as well.
Right. No, that's a good strategy. And at a minimum, we'd want somebody to hold, 10 different stocks and, at least have that sort of the same metrics that we have within fantasy finance, that you can put, 10% across 10 different picks to work. So that is at a minimum. And yeah, we'll see. I mean, I do hope that the person who wins makes some money, because it'd be a great way for November going into December and the holidays to start off that way. But even
well, yeah, I mean, if I looked at my portfolio and I were to have won and I was doing it, I'd be at $2,100 today.
No, there you go. There you go. And November is going to be a tricky month, of course, because you've got elections. And
elections, and then you also have holidays coming up. So,
right.
A lot of stocks could, start to rise just based on consumption of, holiday sales, and we could see some of these retailers start to take off a little bit.
Right. I mean, I'll be interested to see if the person who wins puts the money to work immediately or waits until after the elections to see what the result is, or, tries to play both sides. We'll see, but I think it'll be a fascinating way to kick off the $100,000 investor challenge. And if it's not you next month, we'll see who the model picks, but I hope you definitely get a chance to get picked one month, because I'd be curious.
I would hope that I get to pick a month. I don't know, if I won, I would hope I wouldn't have to do November, but either way, I would do it.
Right, you're hoping you don't win for November.
Right, but the other thing, I think it'll be a great communication back and forth on the feed.
Yes.
On the main feed, just, if somebody won, and, I hope that everyone in the community supports that individual and tries to help them make as much money as possible, him or her. And I know I would be all over them, having that chance to win, and trying to give as much advice as I could on whether it was something I saw in a technical chart or something serious about earnings that I thought was really important. And, I hope the community really supports it. It's not just something where they're, trying to go at it alone. I think a lot of people in the community would be willing to help.
I think, just like you said, just like you would be there to help support, I think what we'll see is that the investor community will just get magnified in terms of the power of the people coming together and contributing to the conversation and the investment choices that are being made. So I agree with you. I think it's going to be a great learning tool for everybody, and hopefully a great way for the lucky winners to make a little bit of extra cash to help build their wealth going forward.
Yeah, most definitely. Do you think that you're going to allow, just 2%? How we have the 2.5% buy-in on particular stocks, or is it going to be strictly just 10%?
That's a very good question, Thomas. And I'll tell you what, I'm glad you raised it, because we're discussing right now internally what is the maximum amount of holdings for them to have. We definitely know we want a minimum of 10, but we haven't determined what the maximum amount is. But I will be discussing internally, and as soon as we've got that all finalized.
You could allow somebody to put 20% into an individual stock.
Right.
Wow. But you're gonna minimize it at 10 rather than 2.5%.
Well, we want at least 10 different instruments that you're holding.
Gotcha. Okay.
So it needs to get some diversification. So we already want to ensure that there's a proper portfolio in place.
Do you think an individual that wins should submit the stocks that they would want to purchase for the month? Or are they just going to go in and start buying, and then you'll either decide whether you agree with the purchase or not?
We'll have some oversight over how it's being done, and just to make sure that it's in compliance with the rules that we're going to set up for the the month that they manage the money, and essentially to help everybody, to help them manage a portfolio, to help them be successful doing it, and ensure that we don't get any runaways that suddenly go crazy on us.
So the new platform that it's going to be on, it won't be on DriveWealth, it'll be on your platform, an investor
Yes.
pre-trading platform.
So for the US market, you're absolutely right. We've got our new platform, Invstr Plus, coming. So that will be coming out very, very soon. And yeah, we're looking forward to releasing more details as soon as it's ready. It's been a while in the making, and we're very excited.
Yeah, I can imagine. I'm excited to see when you guys come out with like the checking and savings account.
Yes.
And see how that works.
Yes, the bank is going to be coming out all at the same time. So I expect you to be one of our first users, as one of our biggest super users, Thomas. So we appreciate all the support you're giving us, and we've loved having you here today. Keep up all the great investing.
Thanks for having me. I appreciate it, Nora Lee.
Always a pleasure. Thank you.
All right, have a good night.
Bye.
Money making moves, machines with tools and drills making.
This is Nora Lee. I'm not a financial advisor, and my comments should never be taken as financial advice. Remember, investments come with risk, so always do your research and analysis beforehand. Happy investing.
Now.